what we're really seeing is a major rotation out of U.S. markets into foreign markets and out of growth-oriented companies into value dividend-paying type stocks, because that's what I own, and that's what's going up so much. And also, a lot of the companies I own focus on consumers outside the U.S., and that is the market, because Americans are not going to be able to afford to buy as much stuff because of the tariffs. And so businesses all around the world that were selling goods to Americans are going to sell less goods to Americans because the prices are going to be much higher. And now they're going to be selling those goods into other markets. So there's a lot of opportunity now outside the United States. There's a lot of pain that we're going to be going through in the United States. It is a liberation day. Trump just doesn't understand who's being liberated. It's the rest of the world that's being liberated from the burden of subsidizing the American economy. Americans are liberated from all the cheap goods that we used to get and the low interest rates and the bull market in assets. It's a mistake to think that the world is ripping us off because we get to consume what they produce. We're ripping them off by not paying for it. You know, we give them, or they give us real goods, and we just give them pieces of paper. So they're the ones that have been getting ripped off. But yes, Trump is right that this has been, reducing our net wealth because we've been selling off our cows to buy milk because foreigners are buying our stocks and our real estate with the money they earn selling us stuff. But the short-term trade-off is that we have a higher standard of living, and that's what's about to be lost. And that's what the president doesn't understand when he promises an immediate economic boom. The transition that he wants is going to be very painful, and it's going to take years and years before there's light at the end of the tunnel. In the meantime, stocks have to go down, real estate, bonds have to go down, interest rates have to go up, actually. The economy has to go through a serious recession that will probably span the entirety of his presidency. The problem is that Trump hasn't prepared the country for that. Trump has promised something he can't deliver, which is an immediate boom. He's focusing on the jobs he thinks we're going to get in the factories. Well, we're not going to make that many factories, so there's not going to be many jobs. But most people aren't factory workers. They're going to lose jobs. And even if they don't lose their jobs, their paychecks are going to not go as far, because everything they want to buy is going to be much more expensive. The tariffs are not on the rest of the world. The tariffs are on America. That's who pays the tariffs. The Chinese don't pay our tariffs. The Europeans don't pay our tariffs. The Mexicans, the Canadians don't pay them. Americans pay them. Well, he's just been misinformed by people that he has surrounded himself with, who are economic ignoramuses, who don't understand the consequences of what they've proposed and what they've convinced Trump to do. Although, if you look back historically, Trump has always talked about, other countries ripping us off. So he's kind of predisposed to believe some of the nonsense that some of his advisors are blowing in his ear. But he's hoping to, reinvigorate our once great manufacturing base. And I would share that goal, but tariffs aren't going to do it. You have to understand why we lost all those factories in the first place. And putting on tariffs isn't going to bring them back. But what we need to do to bring them back, they're not doing. We need massive cuts to government spending. We need a lot more deregulation. We need higher interest rates. We need to reform the entitlements. We need to cut Social Security, Medicare. We need to cut defense. We're not doing any of the things that we need to do. And we need the massive deregulation in the labor markets, the unions. There are a lot of reasons that we're not manufacturing in this country. And you can't just put a Band-Aid on it with a tariff and assume that everything is going to heal. Tariffs aren't even reciprocal. He's just calling them reciprocal so he can use that power that Congress gave him. I think it's all illegal. Trump is putting tariffs on nations that don't even have tariffs. And the tariffs that he's imposing are way out of proportion to the tariffs other countries have. Because where he's getting these ridiculous numbers is he's come up with some, BS formula that basically claims that any nation's surplus with us is the result of tariffs, even if they don't have tariffs, or even if the tariffs are so low that it barely makes a difference. So when he says, Europe has 38% tariffs, so we're going to put 20% tariffs on. Europe is maybe 4% tariffs. It's pure protectionism. I think it's illegal, but I think they will raise some revenue, a lot less than they expect. I think that's because Americans are going to pay these tariffs. But a lot of Americans aren't going to pay the tariffs because they're not going to buy the goods. Yeah, I made fun of Jerome Powell almost a year ago when somebody asked him about stagflation, and he kind of laughed it off and he said, I don't see the stag, I don't see the inflation. And I said, well, he's obviously blind. And my prediction was that comment about no signs of stagflation would go down in history with subprime is contained and inflation is transitory, because he was completely wrong. Not only is this stagflation, but it's severe recession and high inflation. It's going to be far worse than anything we had in the 1970s. When people say, oh, this stagflation, oh, it's not like the 70s, they're right. It's way worse than the 70s. See, what's been happening is we create inflation, printing money, we export it to the rest of the world, and they ship us the stuff that they make. So we have goods to buy and the money goes abroad. And so that keeps prices down and we get more stuff. Then the foreigners take the dollars they earn and buy our bonds, buy our stocks. That gives us lower interest rates and a higher stock market. So we get wealthier on paper, we get to borrow cheap, and we get all kinds of consumer goods we didn't produce, and they're low cost, right? What's going to happen now is all that inflation is now going to move from Wall Street back to Main Street. We're not going to have as big trade deficits anymore. So we're not going to be able to export as much of our inflation. It's going to stay here. We're going to have more money chasing fewer goods. So a big increase in prices. Foreigners are not going to buy as much U.S. stocks and bonds. So we get a lower stock market and a higher interest rate. So that's the reverse of what we've been enjoying. And so it's going to be the worst, thing for Americans, because they're going to be getting poorer financially as their cost of living is skyrocketing. Many Americans are going to lose their jobs. So we're going to go through the worst economy in modern memory. And I don't think anybody alive today has seen an economy that's going to be as bad as this one. Now, it may get better eventually. Maybe we get the benefits of AI and stuff like that. But in the short run, things are going to get very, very bad. And that's horrible for the Republicans, because Trump just blew them up. I mean, the Democrats were in disarray. The party was really in shambles, and this is going to galvanize them, because Trump is going to be the villain that did this. They're going to be able to say he inherited a great economy, which he didn't, but then he destroyed it. And the Republicans are going to be out of Congress in the midterms. I mean, the Democrats are going to get the House and the Senate. First of all, he needed to level with the public about how bad it's going to be. He promised an immediate economic boom, and he's not going to deliver that. So he's not going to have any credibility with the public. Neither are the Republicans who rallied around him. And I think that they're going to give up, because we're going to be, in a severe recession. We're going to be maybe in another financial crisis, and they're going to be going back to government stimulus. They're going to be going back to QE and stimulus checks, and all that's going to do is, throw gasoline on the inflation fire. After vilifying the rest of the world and imposing all these tariffs, now we're asking them to keep buying our bonds. They're not going to buy our bonds. So who's going to buy them? And here's the problem. The president wants us to reindustrialize the country and build factories. Well, if we're spending our money building factories, how do we have money to buy government bonds? And if we end up having to buy all these government bonds, there's no money to build factories. It's all crowded out. So nobody is connecting these obvious dots. We can't do what the president wants us to do, but it's not possible unless we have a massive collapse first. We actually have to cut Social Security and Medicare and defense. We may even have to default on our debt in order to free up the resources to build these factories. Donald Trump is leading the charge to raise the debt ceiling. He should be leading the charge to leave it in place and force the government to cut spending. Instead, he wants to make it easier for the government to keep spending. Gold is above 3,100. We're right near record highs. It's going to keep going up. This is de-dollarization. It's just the central banks that have been driving it up. We haven't even gotten the real investor demand yet. That's coming. Retail investors in the U.S. are going to be buying gold, but they're going to be buying it at much higher prices. They're going to be buying silver too at much higher prices. And the dollar is going to go down. I mean, today the dollar is down by over 2% against other fiat currencies. It's one of the biggest moves down in one day in the dollar that I can remember. And this is just the beginning. So many people were predicting that the tariffs would cause the dollar to go up. And they thought that would take the sting out of the tariffs, because, yes, we'd have to pay the tariffs, but we'd get to buy the foreign goods cheaper with our higher dollar. Well, instead, the dollar is falling, and that's going to augment the damage done by the tariffs. So not only are Americans going to have to pay tariffs on what they import, but what we import is going to cost us more because of the weak dollar. So it's a double whammy. Bonds are rising today, but I think that's temporary. I think bonds are going to fall because inflation is going to erode away their value, and a reduction of demand due to a weak dollar is going to lead to lower bond prices. And of course, as the U.S. economy goes deeper into recession and we get larger budget deficits, that increases the supply of bonds to sell, and we have fewer demand for those bonds. Meanwhile, what no one's talking about is over the next 4 years, about 26 trillion of the 36 trillion national debt matures. So all that debt has to be rolled over. Who's going to buy that? So bonds are going down. The only thing that's going to stop that is the Fed going back to QE. But even that'll be temporary because that will create even more inflation, which is the worst thing for bonds. They don't have to cut, but they will cut. And that's why it's counterproductive. Look, we need more factories. We need to build the infrastructure, the supply chains. Where does the resources come from to make those capital investments? It has to come from savings. Well, what's going to encourage more savings? Higher interest rates. So unless we get the higher interest rates, we're not going to get the savings. And without the savings, we're not going to make the capital investments to reindustrialize. So anything that they do to keep rates down, which discourages the very savings that we need to do what Trump claims he wants us to do, is all counterproductive. And it just makes the problem worse. What are central banks doing when they're buying gold at $3,000 and not buying treasuries? They're saying that we'd rather own this metal than get 4.5% yield on US treasuries. So they don't trust the treasuries because they don't trust the dollars. So they want to own gold. And this is a process that is still early and has a long way to go to play out. You can't price in risk that you don't perceive. That is the problem. The markets don't see how much risk there is. That's just like, you remember with the subprime market, they were pricing these bonds above par when in my mind they were worth zero. Now, why was the market pricing them? Because they didn't perceive the risks that actually existed. And the same thing is happening in the treasury market. There's a lot of risk out there that investors just don't perceive. And so if you don't know the risk is there, you can't price it into your model. But once people start to recognize this risk, it will be priced in. That's why bond prices are going to crash. So we're the ones that have the rough road ahead. We're going to be enduring the recession. So I think selling commodities based on fears of a global recession are wrong. The US is going to have a recession, but our loss is going to be the world's gain. And so I think demand is going to be very robust for commodities around the world. Even if it's diminished here in the US, it's going to be a lot higher outside.